How's it going, everyone? Eric again here for Redwood North Trading. Today is Monday, the 7th of December, 2020. I opened one trade today in CRM, which is Salesforce. I sold the January 15th 200 put for $2.48. Let's check out the trade tab and take a look at the details. Per my usual, I go for the 30 to 60 day window and no weeklies, so none of these orange W's. So 30 to 60, and this is the 39-day window here on January 15th, 2021. I then sold the 200 put here. The entry guidelines for this system is the 15 to 30 delta. I usually hang closer to the 15 delta here, which happens to be exactly where this one is, 15. I almost went with the 195 and the 11 delta to be a little more conservative, but even here at the 200 strike and the 15 delta, I'm still up here at 82% pop, 89% P50. Max loss theoretically is $19,700, and the buying power effect is definitely in the mid to upper range of $2,000, probably more like an upper range. If you have a smaller account, you'll definitely want to define your risk. It's nearing the end of the day and looks like you can get $255 for this, which is a little bit better than I got. As always, if I was going to define my risk, I would look at a 5-point wide vertical spread. I would buy a farther out of the money put for protection, so that means I would buy this one right here. I normally like to get $1 for this, but the problem is if you increase this, look, this is a 200 and 195, so it's 5-point wide. The next strike is $10, right? So you can go more aggressive and you still have a 74% pop with 87% P50. But look at this, you're getting 222, which seems great at first, but then you realize, oh, this is 10 points wide. So now my buying power effect is 808, and Tastyworks is not updating again for me, but your max loss would be the same, it'd be 808. Well, actually that's not even true. If you lock this in at 220, you'd have a 10-point wide spread minus 220. That'd be $7.80. So your buying power effect here is actually 780, not 800. I'm not sure what the bug is with Tastyworks, but it never updates for me. So 780 as your buying power effect, and then also 780 as your max loss. So you could go for this. It technically fits the guidelines. You're at the 25 delta here and the 15 here. So those work out. However, unless you do a lot of 10-point wide spreads, which I don't, all of a sudden you're doubling your risk. Typically you want to stay with the same amount of risk on every trade, right? In theory, no trade is better than the next trade on this system. So with that being said, unfortunately that kind of limits your options here. If you go 5 points wide, you're only getting 75, which that's fine. It's more conservative. You're at 80% pop, 84% P50. And here you go, this is updated properly. You have a max loss of 425, but your buying power is only 425. So again, that's a little low, but everything on here is personal preference. You know, it's low, but it's conservative. So if you want to go for it, you know. Nothing wrong with staying a little more conservative. However, this vertical spread, you know, could take 3 weeks, 4 weeks. So when you look at it like that, to get $37 in like upwards of a month, I mean, that's not great. That's why I try to get $1, because then at least you're getting $50 in a month. But anyways, personal preference reigns supreme. If you're comfortable with that, go for it. If not, then look for something else. I guess we can look at the chart for this real quick. All right, so I obviously opened the trade today, the 7th of December, this vertical line here. When I opened the trade, the underlying price was $228.75, which is this orange dashed line. Right now, the red line is the current price, and it's a little bit lower, which is why if I open my trade now, I could get slightly better premium. I think it's about $10 higher, or 10 cents higher. If you watch my last video, I was mentioning the Elliott wave that I'm kind of learning about. And this one I actually got a tip off of Twitter, of all places. But the account seemed pretty legit, even though his name is Walrus Trades. But if you look back at some of his Elliott wave analysis, some of them have been ridiculously accurate when everyone else was predicting literally the opposite. So if I turn on the Elliott waves real quick here, according to the Elliott wave theory, CRM is coming out of this fourth wave correction. The third wave was this long run up from here at the COVID crash low. You had the 1, 2, And then the third wave is the longest and biggest typically. That third wave was capped off here by this huge gap up in early September, which then immediately kind of came back down, which is part of the correction wave. You have an A, B, and then C correction down here. And then C is where the fourth wave takes off. And assuming this wave holds, it's going to go much higher up here above $300. So we'll see. This Ellie wave stuff is pretty new to me still, but from what I've seen, as long as you're doing things right, it's amazingly accurate. And then one final thing, Salesforce is currently trading around here, 228, right? If you look at the forecasted stock value, you're up closer to 280, which fits in very nicely with this Elliott wave prediction. I use a site called tipbreaks.com, and as you can see here, the forecasted value is 278 for the average, and right now we're only at 227. So that bodes well for selling puts, or if you like to buy calls, you could buy calls. I like to sell stuff, and so that bodes well. The technical analysis bodes well, and so that factored into why I went for this trade too. But again, ultimately the deltas have to match up and the option chain has to make sense. All right, I think that's it for now. Thanks again, and I'll see you in the next video.